Hello, good morning, ladies and gentlemen. You're welcome to another week, and I hope you all had a wonderful weekend as we get prepared to start another week on a positive note. First of all, I would like to say I'm sorry for the for Friday of last week, as I was not able to come on live to do the follow up on the pairs that we have been monitoring throughout the week, and this was as a result of personal issues which was quite beyond my control. So I'm so sorry, but at this moment things are quite fine right now, and I am ready to go with you guys. And for those who are joining us for the first time, you are highly welcome. And what I simply do here is to review the financial instrument that I shared during the course of the weekend. So every weekend like this, I normally have a bucket of instruments that will be on my watch list, which I normally share publicly with you guys. And this session here is only to do a follow-up detail on this instrument. So for this week, as usual, we are having the USOil spot, the XAUUSD, which is the gold, the GBPUSD, and the USDJPY on our watch list for this week. The video for this analysis are right in the description box of this current video. So for those who had not watched it, I would advise that you watch these videos, as it will give you a background knowledge of what I'm going to be discussing right here on the 1 hour time frame, and at the same time it will help you to be able to use the information you have gathered there to decide your own independent decision for the week. So with that being said, here let's dive right into the business for today. And you know how we do it. The first thing we want to be doing is to look at the economic calendar to see what the majority in the market are looking forward to, and at the same time it also helps us to position ourselves in such a way that we can catch any potential trading opportunity prior to the event, during the event, or after the event. So with that being said, here we are going to be focusing on high impact event, of course, which will be affecting any of the pairs, that is the pound sterling, the Japanese yen, and the which other one is that, the US dollar, of course. So let's dive right in. And for Monday, May 15th, today, we do not have any high impact event. So because of the fact that there are no high impact event today, I would like to scale in, filter in, and include the medium impact event, and let's see what today is looking like. So when I go here and include the medium impact event, so the markets, we have a handful of speeches which is going to be coming up today. So we have the Fed's Bostic speech, which is coming in about 3 hours 45 minutes from now. So Bostic is an American economics and academic who became the 15th president and CEO of the Federal Reserve Bank of Atlanta in June 2017. So he's going to be having a speech today. Well, majority will be looking forward to see what he wants to say, if we could get an insight into the health situation of the US economy. Then we also have Kashkari, who is also having a speech in about 5 hours from now. Kashkari took office January 2016 as the 13th president and chief executive officer of the 9th District Federal Reserve Bank at the Minneapolis. So we're going to be looking forward to that one too. And then we have Cook is a member of the board governors of the Federal Reserve System. So these are medium impact events that will be giving an insight into the monetary policy of the US economy at that point. So besides all this one, there are no other event that we are going to be looking forward to today. So with that being said, here we shall be diving right into the charts so that we can look at things from a technical standpoint. And as usual, the first commodity we are going to be looking at this morning is the US oil spot. And on the US oil spot, I hope you watched my video during the course of the weekend, which I actually made a whole lot of detailed explanation on how we are going to be using the structure we identified on the 4 hours time frame as our guide going into the new week. Now let's run through the 4 hours time frame here, and as usual, the first thing we observe is the fact that price action has been bearish, that is since the beginning of the month of April. And throughout that month, we saw this whole situation here where price action consistently found lower highs and lower lows in this market, hereby giving us a descending channel that we want to be using to guide our trading activity for this week. However, something interesting happened last week, so let's zoom into what happened during the course of last week's trading session. As you can see here, so we had some buy position actually during the course of last week. We had a couple of buy positions after taking advantage of this move right here. Then we also took advantage of this one which led to the breakout of that resistant line at one point. Then after the breakout of that resistant line, we saw another retest of structure, which was actually a technical sign that price might likely be going to the upside. But as you can see here, that move did not last long, as we saw price moved about 160 pips in that direction before another sell wave happened in this market. And as you can see here, price action dropped down back below the $72 area, which happened to be our key level last week, and even went further to drop below the resistant line of that descending channel. And it's at this point that we have price action back into the seller's territory. So if you look at this whole structure right now, you would agree with me that price action is back into the descending channel, as you can see here. So we have price back into the resistance below the resistant line of that descending channel there, and it will make quite a lot of sense that we continue to look out for selling opportunities as long as price action remains below the resistant line. So to guide our trading activity for this week, I was able to spot a very simple key level here around the $70 area, and one of the things that made me to acknowledge this level is the fact that it has been a major determinant of price action in the past. If we go to as far back as at the beginning of this month, you will see how price action broke down that structure here. Then we also had during this later part of the first week of this month, we saw breakout of that structure. We saw a breakout, a retest of that level, and during the course of last week's trading session, we saw how price action came below that structure again, did some couple of retests of that level, and we saw some choppy situations around that area on a much more lower time frame. So for this week now, the $70 level is going to be serving as our yardstick for trading activity. And what this simply means is that as long as price action remains below the $70 area, which is also right below the resistant line of that descending channel, we want to continue to look out for selling opportunities. However, if price action breaks out of the $70 area, then at this point we are going to start considering buying the US oil spot. But remember that since price action is below the resistant line, it's a risk worth taking. Actually, we could take advantage of the buy position above that structure. Then if price action continue to find buy pressure above this level, then we look out for more opportunities to buy. Now, with the information we have gathered here on the 4 hours time frame, we want to be scaling down into the 1 hour time frame, where we want to see our participant in this market has actually been reacting to this key level since the beginning of the week, and this will definitely give us an insight into how to plan ahead of the week. So now going down into the 1 hour time frame, this was what I was able to spot this morning, as you can see here. And it is quite obvious that price action has been very indecisive this morning. As you can see, we saw our price action started the week at around that 7. I think I'm having network issues, right? Please let me know if I've lost you guys. I want to know in the comment section if I've lost you. Okay. All right. Let me know in the comment section if you are live back with me, and we're good to go. All right. So we have a very simple setup right here, and it's quite obvious that though price started on a bearish note, we saw how as soon as price action got into that $69.35 level, we saw our price action came back into the resistant line of that channel we just identified there. So with this whole situation we have at this point, it is quite clear that we have an indecision going on right now. But one important thing about this whole indecision phase is the fact that price action is just right within that our key level at the $70 area. So it's important that we remain patient at this point to wait out for trading opportunities. So now with the situation we have here, and with a channel identified between the $70.15 level and the $69.35 area, you will agree that we have a consolidation phase right now. And you all know what we do whenever we have this kind of simple setup. We want to wait and remain patient for price action to either break out of the resistance line or break down of the support line for trading opportunities. Now, with the situation here, and considering the fact that price action was bearish from last week into the beginning of this week, and the fact that price action is trading below the resistance line of that descending channel we talked about earlier, it is appropriate that we have a sell stop order just right below the $69.35 level so that we can capture that move when price action breaks down that structure. Though we could still have opportunities to be part of a bearish momentum even before price action breaks down that structure, but time will tell, structure will tell if that is going to be the case. And be rest assured that I will be with you in the comment section to give you, on my public platform, to give you an update as at when due. Now, with that being said and be set at this point in time, we want to consider the potentials of the buyers in this market. Now that we have a resistance line at the $70.15 level and price action trading above our key level is a sign that we should start getting ready to buy. But we don't want to jump into a bullish momentum at this particular point in time simply because we've been on a very bearish momentum in quite a while, and we want to see some confirmations before we want to be joining any move at this point. So what we are going to be doing here, we are not getting too excited at the breakout of that structure, as we need some confirmations for us to join. So right now, what we are going to be doing here is to wait for price action to break out of that structure. Then we scale down to our lower time frame to look out for buying pressure in the form of price coming back to do a retest of either the 70 or the $70.15 level, looking out for buying pressure on our lower time frame, something like a reversal pattern, after which we want to be part of that move to the upside. So at this point in time, it's looking as if price action wants to break out of that $70.15 level. So let's remain patient and wait for the structure to mature before we take advantage of any opportunity. And one fact here is that if price action breaks out of the structure in such a way that it breaks out of the resistance line of that descending channel we identified on the 4 hours time frame, then this will be a very good confirmation to be part of a trend continuation to the upside. So these are the things we are going to be looking at on the US oil spot for today. So if you do have any questions regarding what I just explained, feel free to drop your inquiries in the comment section. I can see your comment, Ayodeji. How are you doing today? Good morning to you. Glad to have you around. I hope the network is quite okay right now. I also noticed that my reception was fluctuating, so I had to switch my router to the other one, and I think this one is doing quite well. Let me know in the comment section if it's looking fine, or else I just do some little adjustment to to it. Thank you very much. Okay, thank you very much. Thank you very much for that confirmation. All right, so that is that on the US oil spot. So in the absence of no questions, let's move right into the next instrument for today. So the next instrument we are going to be looking at this morning is the GBPUSD. And I also shared an update on the GBPUSD this morning on my public platform, both the TradingView and the Telegram platform, where I made mention of how price action has started the week on the bullish note here. And let's run through that commentary quickly before we go into the details of what we're actually looking at. So this is the TradingView platform, and this is my commentary this morning before we began the live session here. So I said here that the week has started on the bullish note as price action remains above our key level at the 1.24500 zone. Remember, in the video I shared during the course of the weekend, we were able to identify a key level which is definitely going to be serving as our yardstick for trading activity for this week. And you know what the key level does? It helps us to position ourselves in such a way that we can catch a move, and as long as price action remains above our key level, we continue to look out for buying opportunity. But if price drops below our key level, we continue to look out for selling opportunities. So I stated here that a breakout retest of the resistance of our new structure will have broken out of the resistant line of the descending channel identified in the video to incite a potential buying opportunity. If at any point a breakdown of the key level happens, then we will have no choice but to look out for selling opportunities. So let's look at what I'm talking about here and what do I mean by this whole structure. So on the 1 hour time frame, this was what we saw in the video that I shared during the weekend. We saw since the second day of last week's trading session, we saw how price action had consistently and uniformly, in fact, found lower lows and lower highs in this market. And this has resulted in a descending channel, which you can see here, which further emphasizes the level of strength of the sellers in this market. Now, if you look at the impulsive move that started from the resistance line at every point in time, hold on a second, let me show you. You will see that, so look at the first one here. Look at the first impulse leg. Now look at the second one that started on Friday. You can see that it is quite shorter than the previous one, which is a sign that sellers are likely losing that momentum at that point. It's not a confirmed thing anyway, but it's just an insight into what is really going on around this area. So with this situation here, we saw how as soon as price action got into our key level at the 1.245, that was on Friday last week, we begin to see buy pressure resume around that area. And the inability of price action to come back to test the support line of that descending channel is a sign that sellers probably have lost that steam that started the week, that is last week's trading session. And if you look at what has been happening on this chart since the beginning of this week, you will see that we have a simple setup which I shared on my public platform this morning, where we had price action between the 1.248, which is actually the resistant line for the week, and we have the support line here at the 1.24500 area, which is serving as the baseline for buying pressure in this market. Now, there's one interesting thing about the new resistance line we just identified at the 1.24800 area, and that is the fact that it shares a beautiful confluence with that resistance line of that descending channel. Now, a breakout retest of the 1.248 area would have broken out of the resistant line, and if it breaks out of the resistant line, that will have been the first time price action will successfully break out of that structure in the last 1 week. And if this is going to be the case, then we might be getting ready for a reversal pattern that will be pushing price to the upside. And if you look at the structure right now, you will see that we already have a buy position triggered at this point, as price action is currently trading with about 10 pips in profit at this point. And for those who are taking advantage of this opportunity, well done to you for being on standby to catch this move. So let's hope that price action will continue to the upside from this area. So we have our stop loss somewhere right around that support line. Let's give some room for price action to breathe. So let's drop it below the 1.245 a little bit, so that we can have room for price action to do some choppy situations probably before the move continues to the upside, because there's still a chance that we could have price drop back into the resistance line after the breakout of structure. You all know from a technical standpoint that price action, after breaking out of a structure like this, there is a chance it will come back and retest that level. So we want to give some room for this whole situation to happen. So now that we have a buy position triggered here, I also have a buy stop order above the 1.2500 area, which happens to be another key level, which I also made mention of during the my analysis on the GBPUSD during the course of the weekend. So let's see how price action is going to play out at this point. So as long as price action remains above our 1.248, 1.25, we want to continue to look out for more opportunities to add more position to our existing trade. And be rest assured that I will be with you in the comment section on my TradingView and Telegram platform to give you updates as at when due. So if you have any questions regarding what I just explained here, feel free to let me know in the comment section what you want me to shed more light on. So with that being said, I will be moving on to the next pair. And the next pair we are going to be looking at this morning is the XAUUSD, which is the gold. And I also shared an update on the gold this morning. As you can see, hold on a second, where is my chart? Oh my goodness. Okay, all right, so I have it right here. I thought I lost it. So I shared a commentary here this morning. Let's run through that quickly to see what we are actually anticipating. So this is my commentary here on my TradingView platform, which I also shared on my Telegram platform as well. And I said here that the new week has started on a bullish note. The newly identified trend line on the 1 hour time frame shall be our guide for today, as we look out for buying opportunities at the breakout retest of the 2019-2020 zone, while the breakdown of the trend line will prepare us for selling opportunities. So let's look at what we are talking about here. Now, if you watched my video on the XAUUSD, the link is in the description box below, so if you want to watch it, and I made sure that I timestamped it so that you can easily navigate to whichever aspect of the video is of your own interest. So you might want to check it out after the live session so that you can have a background knowledge of how we actually got to this point, and at the same time it will help you to be able to use your own discretion to find your own moves in this market. So on the 1 hour time frame, this was what I was able to spot on the 1 hour time frame. It's quite a very simple setup. The fact that price action has been finding lower lows and lower highs is transitioned into this descending channel you will see on your screen right now. So connecting the series of lower highs and the series of lower lows, we have this descending channel figured out. However, let me scroll into the 4 hours time frame here. Let's see what is going on here. So if we look at the 4 hours time frame here, you will see that since the month of April, I think the mid-month of April, we saw our price has been sandwiched between the 2050 and the 1975 area, giving us an indecision phase at that point. And one thing that we also want to take note of is the fact that in the last couple of months, price action has been finding new highs. We had the 2000 level, which was broken. We had the 2048 around the 2050 area. Then we also had the 2068 level. So we had about 3 new highs in the last 2 months in this market, which is the first this year actually. And from a psychological standpoint, when price action find new high, it takes quite a while before price action acclimatized to that zone. And because of the situation, the emotion of fear is always very dominant when price action find new high, and this is always reflected on the chart in the form of choppy situations, going into consolidation phases, retracement phases, trying to find out if this momentum is actually a true one or a false one. And if you look at what happened at the beginning of this month, we saw this whole impulsive move that climbed all the way into the 2068 area, and then we saw our sellers push price to the downside. And this is exactly the old choppy situation I was explaining earlier, and this is a sign that people are still feeling very uncomfortable about the new high here, so we need to be very, very patient at this point. But looking at it from a technical standpoint, you will see that after the breakout, after the new high was tested at the 2068, we saw how the $2,000 level, remember the $2,000 level had been a major key level for us in the last couple of months, and it still continued to hold as a major platform for looking out for trading opportunities. So look at what has happened after the breakout. We saw our price action came back to retest the structure. You see, so we have something like a demand zone around that area, giving us a new higher low, but we're yet to get a higher high in that regard. Now we saw what happened here at the beginning of this week, of this month. We saw the sharp rejection of that 2000 level, and during the course of last week's trading session as well, we saw how price action did a sharp rejection of that area. And this whole situation here appears to be transitioning into what looks more like a double top structure, which from a technical standpoint is a very, very strong reversal pattern. And if you had watched my video on the XAUUSD, we acknowledge that the $2,020 area is going to be serving as our neckline for trading activity for this week. And you know what our neckline is. It's a platform for to confirm the validity of the reversal pattern, and coincidentally that neckline also is going to be serving as our key level for this week. And you know what we do whenever we identify a key level, what it simply tells us is that if price action remains above that structure, we look out for buying opportunity, but if price remains below the level, we look out for selling opportunities, structures that will support selling opportunities at this point. So with a neckline here and a potential reversal pattern, it's a potential, please remember what I just said here, it is a potential reversal pattern, as the reversal pattern will only be validated after a breakout of that neckline happens. So we have this whole structure right now as we anticipate the breakout of the structure to be part of a bullish momentum to the upside. And it now depends on how price action reacts to the 2045 level here, which is a very strong supply zone that will now determine if we are going to be adding more buy position to our existing trade or get ready to probably sell again if the selling pressure resumes at that point again. Now, when we scale down to a much more lower time frame, what we want to see here is how participants in this market has been reacting to the structure since the early hours of today, and this will give us an insight into what to expect this week. So if we scale down to a much more lower time frame, like the 1 hour time frame in this case scenario, this is what I was able to spot here. So the week has started on a very strong bullish note, as you can see here, and price action started the week at around that $2,008 area, and we saw our price action climbed up to have a new resistant line at the 2019-2020 area. Just around that area we had our resistant line. So we have a simple channel right here where we are going to be looking out for trading opportunities in this market. So in this kind of situation now, we have no other choice than to remain patient for either price to break out of the resistant line or breakdown of the support line for trading opportunity. And considering the fact that we identify the neckline of that reversal pattern around that area, a breakout will be confirming that a bullish momentum is valid here. Now, another thing that I also spotted here is the higher lows that has been happening in this market since Friday of last week. So when connecting the series of higher lows here, I have this bullish trend line, which you can see on your screen. So it gives us a sign that buyers are gradually gaining some momentum at this point in time. So as long as price action remains above that trend line, we feel comfortable in our buy position. Some of you are with me this morning when some people sent me a message this morning saying that they bought it around this area, which is quite okay, but personally I would want to see a breakout of that $2019 area for me to join. So what I want to look out for at this point is price action breaking out, then doing a retest of the structure on my lower time frame to be part of this move. And the reason why I want a confirmation to happen in this market is simply because of this descending channel that we identify here. So if you look at the resistant line of this descending channel, you will see that price action is gradually coming close to that level. So it could get into that level and price could respect it one more time to send another crash to the downside. So that is why I want to see a breakout, then confirmations that buyers are gaining momentum around that area before I want to be joining any move at this point. So that is how I'm looking out for buying opportunities for this week on the XAUUSD. So we are looking for a breakout retest, and if price action goes on to break out of the resistant line, closing above that structure, then at this point we want to be thinking of adding more position to our existing trade. So that is that for the bullish expectation in this market. Now, you know how we do it here. We don't want to put our eggs in one basket, and at the same time we all understand how fluid the financial environment is, and to be very consistently profitable in the market, we want to be as flexible as possible. We want to be as fluid as possible too. So we want to keep our options open. So in as much as we are looking out for buying opportunity in this market, we also want to consider the potentials of the sellers. And for the fact that price action has found a descending channel on the 1 hour time frame, the likelihood of a bearish momentum cannot be ignored at this point. So since we already have a bullish trend line, which we said is going to be serving as our yardstick for trading activity, we could actually take advantage of a sell momentum even before the breakdown of the support line here at a $2008 area happens. So let me label this area for the sake of clarity. So we are having a sell stop order around that area. So we're having a sell stop order there, waiting for price action to drop below that structure. So you can see the difference here. Now I'm having a sell stop order below the 2008, and I'm not having a buy stop order above the 2019. And I told you the reason why. This is a bearish momentum, and the potential of sellers at this point is still looking very possible here. So that is why I'm having a sell stop order around that area. Now, in order to maximize this sell move, we want to see if price action drops back into the trend line and in fact breaks down that trend line, then at this point we want to be seeing this as a bearish signal. So a breakdown of that structure, remember we are not getting too excited. We want to see price action do some retest of structure. So it could even come back to the retest of the 2020 sincerely, because we already have a breakdown of that trend line. It's a sign that sellers are gradually trying to gain some momentum in this market. So if it so happens and we continue to see certain pressure on our lower time frame where buyers are finding it difficult to climb back above the trend line, then at this point we could have a sell position triggered. Then if price action goes on to break down the 2008, it would trigger our sell stop order. Then we look out for more opportunities, and depending on how price action reacts to that very strong $2,000 level, which happened to be a very strong demand zone in the last couple of months, will now determine if we are going to be adding more sell position or getting ready to buy at that point. Now, to make things a little bit more easy after the breakdown of this structure, let's have a level that we are going to be using to guide selling opportunities in this market if price action ever breaks down that trend line here. So I will be giving this a much more different color to differentiate it from the other structures here. So we have $2014.50 level figured out here. So $2014.50. So we have this level here. So I give it a red color. Okay. All right, so we have something like this. So this is going to be guiding our moves. So what this simply means is that when price action breaks down the trend line below the $2,014.15 level, $2,014.50 level will be giving us that privilege to be part of a sell move. If selling pressure continues below that structure, then we look forward to adding more positions as price action drops further to the downside. So this is my views here on the XAUUSD for today. So I hope that will be on standby to be part of this moves, and be rest assured that I will be with you on my trading view and Telegram platform to give you an update as it went due. So with that being said here, let's move on to the last pair for today, which is the USDJPY. So the USDJPY, we have been seeing some bullish traction going on this chart. So before I go into the details here, let's quickly go through my commentaries this morning on the USDJPY, which I shared on both my trading view and Telegram platform. So here we are on the Telegram, on my trading view platform, sorry. So this was my first commentary this morning. So I said here that price action breaks out of the 135.700 level, a level which was identified in the video to start the week on a very strong bullish note. Now my question here at this point is, will this be a true or false breakout? Now we have a simple structure to guide our move for this week as we wait patiently for a signal in the form of a breakout or breakdown of the structure within the 135.700 and the 136.260. So let's go back into the live chat and see what I'm actually talking about here. So if you had watched my video on the USDJPY, you would remember that we acknowledged the 135.700 area as our key level for the new week, as we saw our price action, though we had a bullish momentum on Friday of last week trading session, which we actually have been anticipating since the beginning of last week. It took about 96 hours before we saw that bullish traction finally come in. And for those who took advantage of that opportunity, well done to you for being on standby to catch that one. But during the video I shared this weekend, I told us how the 135.700 area here is going to be our guide for today. And I also acknowledge how we've been seeing some selling pressure around that area close to the end of last week, and we said depending on how price action reacts to this level will determine how we are going to be trading for this week. Now if you look at what has happened since the beginning of the week here, you will see how price action did a breakout of the structure. As you can see here, we saw the breakout of the 135.700 to set a bullish tone in this market. However, as soon as price got into the 136.260 level, which happens to be the highest point price action had ever been for this week, we begin to see selling pressure resume around that area. And what this simply tells us is that price action might likely go through a choppy situation during the first half of this week. Within that range, we never can tell, but the fact that we have a range here is enough for us to position ourselves in such a way that we can catch any potential opportunity from this juncture in this market. Now to position this, we all know what we want to be doing. We want to remain patient, waiting for a signal in the form of either a breakout of the resistance line at the 136.260 for buying opportunities, or the breakdown of the 135.700 for selling opportunities. So let's quickly talk about the potentials of buyers in this market. Now the first thing I would like to do here, considering what has been happening in this market since Friday of last week, and since the closing hours of Friday, we have a trend line here. So when we connect the series of higher lows, we have a trend line, which is going to be one of the structures we are going to be using to guide our trading activity for this week. So let me draw this out, then let's see if we have some adjustment to make when we bring out our candle chart. Of course, we do have some adjustment to make. So we have something like this right now. So this trend line here is going to be serving as one of the parameters that will be guiding our trading activity for today. Now, how do we make use of the structures that we have right now? So the trend line here is telling us that as long as price action remains above that trend line, we feel comfortable in our buy position and look out for more opportunities to buy. So in that regard, if price action remains above that trend line, I want to have a buy stop order above the 136.260 level to be part of this bullish move. Since price action has been bullish actually since the later part of last week, then I feel comfortable taking advantage of a buy stop order above the 136.260. And if it so happens that price action continues, comes back into doing a retest of structure, which is very possible. So because of this, you want to have your stop loss as wide as possible to capture this whole situation here. So it could be around 35 to 40 pips thereabout on that one. What we just want to do is to give room for price action to breathe, and the trend line there is also a yardstick to guide where our stop loss could likely be in this market. Because if a breakout of the 136.260 happens, you know that from a technical standpoint, we expect that a retracement is still very possible, like a retest of structure, which could come in the form of a retest of the 136.260, or even go as far as retesting the trend line before another wave of bullish momentum happen, which will definitely give us more opportunities to add more position to our existing trade. So that is how we are going to be taking advantage of a buy position from this current structure. Now, moving on, you know how we do it here. As long as we have the potentials that sellers is still going to be coming in here, as you can see, we have been citing some selling pressure around the 136.260. Let's look at the possibilities and potential that sellers have from this current structure. Now, before I go into that, I want us to go into the higher time frame, that is the 4 hours time frame. And for those who had watched my video on the USDJPY during the course of the weekend, you would have seen how I emphasize the importance of this potential reversal pattern identified here. So the first thing here is the fact that price action has been bullish since the month of March of this year. And one thing we saw at the beginning of this month was quite interesting, how price action transitioned into a double bottom structure, as you can see here. So we saw the first touch here, price action came into the structure, we saw the second touch, and now we had a reversal pattern after the breakout of that neckline at the 135.300 area. And you all know that when price action breaks out of a key structure like this, there is still a chance that we could have price action do a retest of that level at one point. So when that will happen, we don't know, but the only sign that we could actually anticipate that a retracement phase that will come to retest the structure is gradually building up is when we start citing reversal patterns along or at the tip of this impulsive move. And not until when that happens, we won't be buying, we won't be selling the USDJPY. So the potential of the sellers will come in if we start seeing reversal patterns where price action might likely come back to retest the 135.300 or the 134.750, which also shares a confluence with our trend line. So this is like about how many pips move that is. So a minimum of 70 pips to a maximum of 130 pips to catch there if we start seeing reversal patterns around that area. So now with the information here, you will now understand you now get to understand the importance of what I will be explaining on the 1 hour time frame. So let's go back into the 1 hour time frame here. And on the 1 hour time frame, we have a couple of structures here. So I did this, I analyzed this, I shared this earlier. So we have a bullish trend line here since Thursday of last week, after connecting the series of higher lows here. So if at any point in time we start seeing signs that sellers are coming in, that is, price was unable to break out of the 136.260 level here, then we look out for selling opportunities, and this will come in the form of a breakdown of this trend line, and then we look out for retest of structure to be part of the bearish move to the downside. So we could capture that move even before the breakdown of our key level at the 135.700 level happens. So this is how we are going to be looking out for selling opportunities here. Then depending on how price action reacts to the neckline of that reversal pattern we identified on the daily time frame, will now determine if we are going to be adding more sell position or anticipate the second wave of the bullish momentum that broke out of that neckline on Friday. So these are my views here on the USDJPY, and I'm very sure we are well equipped ahead of the London and New York session to take advantage of any potential opportunity here. But rest assured, I will be with you in the comment section on my TradingView platform and Telegram platform to give you updates as at when due. So on this note, I want to wish you best of luck today and hoping to see you right in the comment section on my public platform as we continue to monitor price action. Do have a wonderful day, everyone. Bye bye.